Well, welcome back to CEO Money. I'm Michael Yorba.
And I'm Evan Price.
All right, we've got Karen Rands, Kugerand Capital Holdings, Kugerand.com. Special thanks out to Kelly Black for the introduction. All right, Karen, when we left off, we were talking about a number of things. I want to move forward here. You've got a couple of things that entrepreneurs get wrong, and I want to know what they should do to get them right about angel investing, and how they get a paradigm shift going on.
Okay, so one of the things that I think entrepreneurs get wrong oftentimes is, first of all, expecting investors to participate at a much higher level than they typically do. I'll see them put an offering together where they have a minimum investment of $100,000, and they're doing that in order because they think investors are going to be a pain, and so they want to only have a few investors. And the reality is that the national average of angel investing, the amount that an active angels in the angel groups today do, is about $25,000 to maybe $50,000 in a traditional type of startup technology company. Of course, the West Coast will tend to invest a little bit more than the East Coast, so that's how the average gets done. But that's probably the first thing. And then the second thing is they don't understand that selling to investors is much like your process of selling to customers. You have this idea of a funnel that you have to create a strategy of getting so many eyeballs, so many touches, so many ways to fill your funnel, and then you have a process that you convert them into buyers. Well, it's the same way when it comes to creating a capital strategy. You have to understand how many investors you need to get to your number of what you're trying to raise based on the average of what they're going to invest. And then you have to build a strategy that puts you in front of enough investors in order to create a successful funnel, and then have a process that you follow through and follow up and follow through with those investors until you actually get a yes or a no.
Tell me, stop. Tell me about putting that strategy in place. I mean, it's one thing to say it, but then it's a whole other thing to break it out. And how does that happen? How do you get yourself in the front of all of the right types of investors that not only will invest with you, but actually you can learn from to do what you're trying to do better? How does that happen?
Okay. Well, so let me give you a formula that I use. I call it the Kugerand theory of private equity.
Right.
And so for every person that strokes a check, you'll have 3 that we call sweethearts, and those are people that you spend time with, giving them information and answering questions. To get to the order of magnitude for that is a 5x. So if you're raising $1 million in $25,000 increments, that's 40 check writers. But to get to 40 check writers, you'll have spent time with 120 investors answering their questions. To get to 120 investors, 600 of them, people have to have seen it more than just, a blurb or a blink. They have to actually understand what the company's doing to say, no, it's not my industry, it's not my stage, it's not something like that. So if you start with building a strategy, so how do I get in front of 600 investors to answer your question? And it may vary depending on how you get momentum going. So the traditional model is angel investor groups and pitch events and things like that. And one of the big things that I always teach entrepreneurs when I teach them how to pitch investors is you're not getting to a decision right then. What you're trying to do is create a buzz with who you're talking to, so that when the 20 investors that are in that pitch event leave, even if only 3 or 4 of them are interested in your deal, the rest of them understand the opportunity, even if it isn't what they want. So when they're on the golf course the next week or doing whatever they're doing, and a topic comes up that's relevant about that company and that industry, they go, oh, I just saw a company about that. It looks pretty interesting. It wasn't really my thing. Maybe it's your industry. Why don't you take a look at it? And what ends up happening is that in that word of mouth referral, then that one that is in that industry, that other person may follow along just because their buddy's investing in it. So that's the traditional model. In the new model of using the internet to promote, we don't really have an understanding of how many additional eyeballs have to have, but a big part of it is having just like if you think of a public company, nobody decides to invest in a public company without having really good information and solid information about the structure, the plans, the, industry reports and things like that. So the bar is a little bit higher because you don't necessarily have that personal persuasion factor in there. You have, in order for them to convert from clicking on a link on a website to actually reading information to, watching a webinar or something like that to becoming an investor. But it's all part of building that and really creating a buzz. And with the ability to advertise, you can create credibility by, advertising your company. You think about some of the consumer products that are out there now, like Untuck It, for example. Who ever heard of Untuck It before 3 weeks or a month ago when they started advertising?
Karen, you're a recognized name in the investor network. I'd heard of you even before we came on the show, and it's remarkable what you do. But you don't just work with angel investors in that sense. You have a whole different method of working. Sometimes you call it compassionate capitalism, but you work with a CEO. Tell us how you get that CEO in line and you put him in front of the investors with the right appetite for that type of investment, because that's quite a complex pathway.
Yes. So the first piece is that usually people, first of all, whenever anybody comes to me, chances are they've struggled to raise capital. People don't come and ask for help from me if they're having no problems raising capital, right? So the first step is them, recognizing it, but then sometimes they have to reflect on how they're communicating and how they're messaging to the investors, how they're explaining their opportunity, and they also have to understand that once you get through the gauntlet to get to an investor, and investors narrow down their choice of one or two companies, then it's a competition with all the other opportunities that investor could be investing in. And so I help them understand that. I teach them that. I teach them how to communicate and talk money to investors. And then depending on the type of capital raise that's recommended for their stage and type of company, I'll either advise them and coach them on how to go about doing that so they can do it themselves, because it's a crowdfunding kind of a deal. If it's more of a general solicitation under the Reg D 506C or Reg A+, then I bring my team to place to put all of that collateral in place, and we get them in a ongoing mode to manage the investor relations. We get them into events that are appropriate for them to be pitching to investors. We connect them up to syndicate with family funds, with various other angel groups, with boutique venture capital firms, various angel funds, these things, because, to raise $1 million, $2 million, $3 million, whatever it is, you have to have momentum. And then once you get momentum, different types of money will come in at different stages of that. It's always hardest to get the first money in. And so that's, the most activity. And then you start to get momentum.
Karen, money likes company. And so have you ever been in the position where you've had a CEO with a brilliant product, you've groomed him, you're ready for the beauty contest, you're ready to roll him out, and then do you ever assemble the angels yourself and put a team together, because then they can basically be a syndicate and work with them that way, or do you hit the angels one at a time?
Okay, well, yes, no. Okay, so it probably depends a little bit on the industry. Part of sort of my, when I ran an angel investor group that was an active group that had events, that was exactly how we did it the whole time. It was a deal champion, you put it together and you build upon that, and you get extensions, through the greater networks of people that may not have been able to physically be in the room. And then as we do it now, of course I have my investor network, and part of the goal of this book, and people when they buy the book, they'll gain access to the National Network of Angel Investors as a member, and then through that we will identify what they're interested in, and once we know that their industry maps with the kind of company, then of course we'll be pulling them together. I'm not licensed to broker that deal, but the good news about the way people can raise capital now, they're not required to work through a broker-dealer. I manage the investor relations, and that's part of how Kelly and I work together to communicate out to those folks. So as they come in and they express interest, we capture that. I help them understand the opportunity, get them connected with the entrepreneurs through a transfer agent so that they can actually start to make that and then build upon that through all those other networks and funds that
Karen, we've got to close. We've got a hard break at the top. I want to thank you for being on the show.
It's been marvelous.
Well, thank you.
You're welcome, Karen Rands, Kugerandholdings.com. Special thanks to Kelly Black for the introduction. You listen to CEO Money with Michael Yorba
and Mervyn Price.
We'll talk to you again tomorrow.
Thank you, Michael and Mervyn.
Thank you for listening to CEO Money. If you would like to be a guest on our show or know someone who should be on our show, please contact us at info@wfn1.com or our website, wfn1.com. If you would like to reach any of our guests, please visit us at wfn1.com. Join us on Twitter at WFN Live or our Facebook page at WFN Live. We will be back tomorrow with more great interviews and ahead-of-the-curve information you just can't get anywhere else.
CEO Money is sponsored by WF News 1 Incorporated. Views and opinions heard on CEO Money are not necessarily the opinion of this station or its management. Material on this program is intended for general information only and should not be taken as specific investment, tax, or legal advice.